Hi everyone, Buyer's Agent Jay Pace here for Providence Property Group with the market update for the month that was April 2024. For those of you who are new to the channel, we're a national buyer's agency with offices in Sydney, Melbourne, Brisbane, Adelaide and Perth. We believe that there's always an opportunity somewhere and we help you to be a player and not a spectator in your wealth journey, focusing on quality properties over quantity. Operating through 3 decades, our experience will ensure no sleepless nights worrying about property markets. And on this channel, we talk about all things property, but most importantly, I read the news and separate the fact from the fiction so you don't have to. Let's jump into it. So the hike in April's market marks 15 months of steady growth in the housing market. So we're talking about an 11.1% increase, which is roughly about $78,000 since the low point back in January last year. That's 2023. And when you look beyond the main figures, there's a varied pace of growth happening. And the median-sized capital cities are really setting the trend. Perth is leading the pack, and this is something that I've been saying for about 3 years now, and it did a solid 2% jump last month, which is quite insane. Adelaide's not too far behind at 1.3% increase, and Brisbane's also doing well at 0.9. Now, if you watch my video from February 2021, I said that Brisbane, Perth, and Adelaide were going to be the top 3 performers for probably the next 3 to 5 years. Let's see how long that continues. Last week, we had about 1,900 auctions in the capital cities. And guess what? 72.9% of them actually sold. So it's pretty much the same number of auctions as the week before, but it's 9.4% more than the same time last year when only 1,739 homes hit the auction block. So we're doing pretty well. I thought this was a nice little break from my usual data. The founder of Aussie Home Loans, John Simmons, he has listed his jaw-dropping Point Piper mansion, and it is currently for sale. An even more dropping number is the price tag. They want $200 million, for this property. 200 million. My brain can't even compute it. The property was purchased in 1999, and it took 8 years to build. The home is built over 4 levels, featuring entertainment area for 500 people, undercover parking for 20 cars, 8 inside the garage. It says 4 bedrooms plus 2-bedroom apartment, which makes me think it's only got 6 bedrooms in it. The listing is quite vague. You need to contact them, and obviously they weren't going to probably take my call about this property. It's got a pool, wine cellar for about 2,500 bottles of wine. It's got a theatre with 22 seats. It's got 2 commercial kitchens encompassing 2,676 square meters of land, and it's got 98 meters of harbour frontage with front row views of Sydney Opera House and the Harbour Bridge. So I found this information actually interesting because I had to look at some type of data. If you bought this property for $200 million, the stamp duty would be $14 million. If you're a local, if you're from overseas, it would be $16 million. So it's just insane. Our media cycle is so short today. As property owners, it's pretty easy to get caught up in the short-term fluctuations and loss, and lose insight into what's actually happening with the market, just from a long-term horizon perspective. So historically, home values in Australia have escalated significantly, okay, boasting about 80% increase since 2014. So it's 10 years. And remember, that was during a time where the media told us the market was definitely going to crash. We had, Royal Commission 2017. We had COVID 2020. We had the construction cliff 2021. We had the mortgage cliff 2022, 2023. All these different things happening. And the market did 80%. So to put this into perspective, the average Australian homeowner holds their property for about 11 years. So they've made over 80% during that time. It's quite amazing. Before the pandemic, the national median sale price for houses was roughly 10% higher than it was for units. And since mid-2020, this disparity has ballooned to a striking 31.9%, translating to a difference of around $195,000. So the growing variance can be attributed to the increased demand for houses during the pandemic. And as people kind of sought more outdoor spaces and additional rooms for remote work, since 2014, house values have skyrocketed by 89.4% compared to a 44% increase in units. So what I'm saying here is that we've had half the increase in price points for units that we have for houses, but with all this migration happening, I definitely see that units are going to go for a run. I've been saying it for about a year now, and I think it's definitely going to start to happen soon. Now, if you've been following us for any period of time, I'll just move my head out of the way, you will know that we're huge advocates of quality over quantity. So every week, clients ask me if I should, divide their funds between multiple properties or just buy one property. And the answer, of course, depends on the budget, and it can be easily answered by reviewing the median dwelling values of a specific capital city and the goal for the client, typically growth versus rental yield. So you can come up with the answer pretty easily if you know the variables to look at. Australia's luxury property market has significantly outperformed over the past 10 years and will likely continue its strong trajectory going forward from some new data that was recently revealed, and we'll go into it in a moment. So Ray White's recent economic update reveals that the median priced houses increased by 78% over the past 10 years, while luxury property houses valued in the top 5% doubled in value over that same period. Okay? So an extra 20 odd percent, which is quite significant. The reason why this is important is because people are always saying, well, why would maybe it's better to buy the worst house in the best street or the best suburb than buying the best house in one of the worst suburbs. And this is something I tend to agree with. Luxury houses have seen strong price growth over the past decade compared to the median property prices on the market. So in Sydney, and I'll just move myself again. In Sydney, luxury houses in certain areas have provided 30% higher than the average house over the past decade. So they've provided 30% higher average returns. So it's important to note that luxury houses also exhibited a lot more volatility though in price growth, because they're luxuries. So when things get tight, we're in economic turmoil, usually luxuries are the first things to kind of go. So timing the purchase of a luxury home is really important when it comes to purchasing this type of product. But it's not just houses that have seen stronger price growth over the past decade compared to the median property on the market. Luxury apartments are also performing strongly. So luxury unit prices have outperformed the fastest in some Sydney suburbs, seeing values triple actually over the past 10 years. And some of the suburbs that come to mind from the report I was reading were suburbs like Bondi, Balmain, Point Piper, etc., Rozelle. Some of these suburbs that, typically are closer to water, where there's older product around it, and because the density of the areas is so much that people are starting to stack on top of each other. So I thought that was quite interesting. The Australian Bureau of Statistics, the ABS, actually revealed in late January that the annual inflation had fallen from 7.8% in December 2022 quarter to 4.1% to the December 2023 quarter. And this graph shows that. So even better, prices rose just 0.6% during the final 3 months of the year, suggesting that price growth has really tapered off. Now, I agree with that to a certain extent. It depends where you're looking at. This is a very broad statement that the Australian Bureau of Statistics has kind of put out there. But the reason the RBA increased the official cash rate from 0.1 to 4.35% in May 2022 and November 2023. So remember, we had that time, May 22, November 23 increases, was to take the heat out of the economy, and the aim was to slow it down just enough to return inflation to 2 to 3% target range, but not so much that it drove the economy into a recession. And that was the thing they were trying to juggle. Now that Australia appears to be close to defeating inflation, most economists believe that the RBA will no longer feel the need to increase the cash rate. So if that's right, hopefully that means we've peaked and we're not going to see any more increases. I do think there's one more up their sleeve, but that's just me. So since April 2022, when interest rates were at 0.1%, that was the cash rate. It's so crazy. April 2022, 0.1%. The average Australian mortgage has seen annual repayments increased by $16,788. And this was the big claim that the media was making, that, oh, for this much more money, most Aussies can't afford that, they're going to sell their homes. And it hasn't obviously happened. But this is a pretty interesting chart, because it shows that they had a panel of 31 leading economists, and they got them together and they said, based on what your understanding is of the market, where do you think interest rates are going to go? So the panel came together and basically put this information, and the average forecast is for the Reserve Bank to delay cutting interest rates and keep it near its present 4.35% till at least the middle of this year. And it's May already, so we're there. And then cutting it to around 4.2% by December 2024, 3.6% by December 2025, and 3.4% by December 2026. So definitely there are going to be some cuts, but if you think that we're going to see, interest rates back down to 2% or something like that, you are dreaming. Even 3%, you're dreaming. So don't let that be a reason why you're waiting, because as you can see from my videos, the market's moving up significantly faster than interest rates are moving anyway. So it's important to be a part of the game. Okay, let's look at the Hedonic Home Value Index here. So just having a look at these numbers, we can see that, where are we? Here we go, that's a bit bigger for me and I'll move my head. We can see 2% increase for Perth, 1.3% increase for Adelaide, 0.9% increase for Brisbane. Hey, look at that. Again, the top three, Brisbane, Adelaide, Perth. Now, annually, the performance obviously in Perth is very attractive. And anybody that bought or listened to somebody who told them to buy 2 or 3 years ago now is sitting quite pretty at 21.1%. Don't worry, the party's not over. Like I showed you in my last video, it looks like we got probably another 20 to 30% growth over the next 3 odd years for places like Perth. 16.1% in Brisbane, second place, and 14% in Adelaide. So interesting growth. This is the table that most of my clients are asking me to redo for them every single month. And this is the table that shows you the performance for the annual 12-month movement, rolling annual 12 months for the market. So this is from May 2023 to May 2024. And what we've seen here is Perth again pushing up, holy moly, up to now $2,900 per week at $152,000 for the year. Brisbane pushing up to $2,500 per week at $133,000 for the year. Adelaide up $104,000 or $2,000 per week. So just back to Brisbane, that means Brisbane stayed the same. That's why it doesn't have an arrow either going up or down. It's the same. Perth's jumped up to $2,900 now. Adelaide's jumped up to $2,000 now. Sydney's actually going down. Now it's at $99,000 for the year or $1,900 per week. And Melbourne also dropping down slightly to $22,000 for the year or $4,000 for the week. Do not delay. If you're thinking about buying a property, the market is moving. Low rental vacancies. I mean, this is pretty much unchanged, still around that 1% mark, and that's 60% below the 10-year average. No wonder why rents are going to continue to have that pressure to go up. Gross rental yields for dwellings across the combined capitals still at about 3.6%. A few changes on some of these major capitals, but nothing to write home about. Again, Perth still very attractive at 4.5%. Brisbane and Adelaide 3.9 and 3.8. And you might say, well, Jay, what about Hobart at 4.3 or even Darwin at 6.5? Again, it's not just about rental yield. You also want the economy to be doing well, population growth to be high. You want interstate migration numbers to look attractive, employment, all of those things. And that's why Brisbane, Adelaide and Perth really are the main winners at the moment. As a result, probably of that lowest vacancy rate in Australia for Perth, it still is seeing the largest increases in rent over the past 12 months. Now let's quickly talk about interest rates. The Reserve Bank of Australia has held the country's official interest rate at 4.35% following its May monetary policy meeting. And the decision comes as the latest data from the Australian Bureau of Statistics showed annual inflation fell in March 2024 quarter to 3.6%. And this was the 5th consecutive quarter that inflation has started to ease. Now I'd like to talk about some of our recent purchases and explore some of those options. Now, if this home doesn't represent value for money, then nothing does. So we bought this beautifully renovated 4-bedroom home on a massive 700 square meter block. The buyer plans to live in this home itself, so it's not necessarily an investment property. The internals are spacious, it's warm, it's beautiful. It's got a really inviting outdoor entertainment area with a pool. It's 22 kilometers from north of Perth CBD. It's less than 2 kilometers to the beach. Purchase price was $1,355,000, so a little bit higher, but at the same time for Perth, it's high, but for the rest of Australia, it's quite cheap. Rental estimate would be around $1,100 per week. So let's say about 4%, something like that, a little bit higher. And we love this property because it's a top location. It's a low maintenance property, above average rental yield, and it's got owner occupier appeal. Now, check out this massive 369 square meter house on a 607 square meter block in Brisbane. I mean, 369 square meter house, that's larger than most of the new blocks that I'm seeing in some of these outer western suburbs in Sydney. So it's pretty insane. We picked this up for a couple who had an all too familiar story. They are based in Sydney, and they couldn't justify spending the money on a home. So they decided to create a portfolio and continue renting in areas of Sydney that are considered very expensive. And the first of multiple purchases that we've done for them was this property in Brisbane. So this focuses more on capital growth. And when purchasing a property for capital growth, you need land and location. Unfortunately, that often translates into old, which can cause higher maintenance costs and lower rental yields. So this is why we sought out a recently renovated property to kind of counter those negative effects of buying an old property. Now, this is a classic Queenslander style property and the storage is insane. The footprint of the block is also very impressive, and it's going to serve our clients well over the years, as it's had an average increase in capital growth by about 7.35% per annum for the past 10 years, which is really impressive. 10 kilometers north of Brisbane CBD, so close, $1,020,000 purchase price. Rental is going to be about $800 a week, so about 4%, which is still above the average 3.6% for Australia as combined capitals, so I think that's good. And why do we love it? Again, it's a top location, that's what we always focus on, above average rental yield, owner-occupier appeal, it's recently renovated, and it's got a large land component to it, so it really does make sense. This one I kind of fell in love with. I was a little bit jealous when my client bought this. This is another Perth property close to the beach. Now, if you don't know Perth and you're from Sydney and you're one of those people that still doesn't like Perth, that's fine. But imagine Brighton, La Sands, or kind of Sans Souci. Imagine the coastline for that area stretched for 150 kilometers, okay? And also the prices are 70% lower, okay? Just think about that. So this house is 300 meters to the ocean. I'll show you because you can see it straight from the bedroom. It's fully loaded, solid stone bench tops. It's got an under-mounted sink, top of the range 900mm appliances, Bosch dishwasher, all that type of stuff, double fridge recess, glass splashback, built-in pantry, breakfast bar, masses of storage. You've got everything you need. Look at this property. Now, a lot of clients, the beach is right there. A lot of clients, when we speak to them about buying a corner blocks for me are ideal because obviously you're always going to get that natural light from one side. But a lot of clients hate it because you've got to mow the lawn. I've got a corner block here where I live in Sydney, and it is a big job to mow my lawn. This is amazing because this is a corner block with no lawn. So it really is a bit of a unicorn. And we purchased this property due to the sweeping ocean views, strong rental yield, and low maintenance. And we were successful because we actually had a really good relationship with the agent. This is a beautiful low maintenance corner block. And like I said, no grass. Look how close it is to the water. That is the balcony. So you've got the ocean views there. That is just absolutely gorgeous. And they're not building anything here. Okay, it's a car park area. So it's just gorgeous. Internals are lovely. It is a modern beach house, 37 kilometers north of Perth CBD, $880,000. Okay. That's the price. We're getting an $850 per week rental yield or 5.02%. Now, I just want you to take this into account. This house is about $35,000 more expensive than the average 2-bedroom unit in Sydney. And I'm not talking about Sydney CBD. I'm talking about the average of Sydney, probably around 25 kilometers, okay, within that radius. So it is $35,000 more expensive than the average 2-bedroom unit in Sydney, but it's providing a 25% higher rental yield. Just let that sink in. Why do we love this property? I mean, you can tell I kind of love it. Top location. Look at it. It's modern, low maintenance, great appliances. It's fully decked out, above average rental yield, owner-occupier appeal. It's just a great property. I was really proud of my team for finding this one. Remember, we can't help you until you commit. And once you commit, we won't let you fail. So we are bringing two things together here. Your desire to build wealth and our 18 years of experience of buying properties. So for more than 3 decades, Providence have helped Australians open a life of opportunity through real estate, giving them the future that they want. And we buy unique, quality assets in areas where demand outpaces supply. You can see that every week when I show you these examples. And we focus on properties that appeal to a much larger market of owner-occupiers, 70%, not that 30% investor market. That's not what I want to play in. And we buy in the right capital cities at the right time, guided by economic property cycles. And if you watch my videos and the videos from the company, you'll see over the years we've swapped from Sydney, Melbourne, Brisbane, Adelaide, Perth. It just depends when the market's moving. That's what you have to focus on. So this is how top investors buy properties. This is how their portfolios perform well. If you like what you're seeing here and you want to be kept in the know with the Australian property market, make sure you like this video, hit the subscribe button and check out more of them. I want to thank you for your time today and I will see you next month.